Now, just quickly before we get to analysis, I just want to say I'm very proud of the team for executing on patience, okay? As you know, with my analysis, it could be a day, it could be a couple weeks until entry conditions are met. But when you stay patient and you stick to the game plan and entry conditions are met, when we make it, we make it. As you guys know, we're in the green in all of our trades and there's significant pips, okay? So congratulations, and let's keep growing. Let's have another hard week on Aussie Kiwi. Onto the monthly as usual. What do we look for? We look for horizontal area sensitivity. So we identified our monthly upper zone, we see sell pressure. We identified our monthly lower zone, we see buy pressure. Okay, so what do we have here when we have sell pressure to the downside, buy pressure to the upside on a horizontal level? Well, we have what we call a consolidation period. So this is a monthly consolidation period. Now, even though we're on the monthly, I wanted to identify our weekly mid-range zone, because I want you to notice that even on the monthly time frame, we're noticing a lot of previous respect, either sell sensitivity or buy sensitivity. So the weekly mid-range zone, when we take it down a time frame, is very, very well respected. So we need to keep that in mind. Now, before we take it down to the weekly, I want to pay attention to this bullish engulfing candle close on the monthly time frame. Now, this was the long that we took on our previous entry that we capitalized on this pair, but it's time to talk about price action as if we don't know anything about it. So we have a bullish engulfing candle close on the monthly time frame. What is an engulfing candle, whether bullish or bearish on a higher time frame? What is that when you take it down a time frame? An engulfing candle, when we take it to the weekly, is a push. Why? Because it broke previous high, okay, which is an area of sensitivity. So when we take it back to the monthly, we can see this bullish engulfing candle, and we know that this bullish engulfing candle on the weekly is a push. Now, what's after a push to the upside? An exhaustion to the downside. And when does exhaustion begin? At area of sensitivity. So here we have a bullish engulfing candle on the monthly time frame, which when we take it down to the weekly, I know is a push. Now, we know that pushes will end at next area of sensitivity. So this is our next area of sell sensitivity, right? It's our weekly mid-range zone, which is really well respected. So here we have a push. What can we expect next? What's the highest probability play? That's right, an exhaustion. Now, exhaustion may come back to its next area of buy sensitivity, or it may come back for a full exhaustion to retest its monthly lower zone. And we can see this happening here. We had a push to the upside, which is a bullish engulfing candle on the higher time frame. Price saw sell sensitivity. So what's after a push? That's right, an exhaustion. And we're seeing the same thing here. We can expect sell sensitivity at our weekly mid-range zone to enter the market and send price down for exhaustion. So this is a higher time frame. This is the weekly time frame, which tells us what? We know the next probability is an exhaustion. We know that price is at an area of sell sensitivity. So what does that mean? That's right, we're only looking for entries to the downside. There is no high probability entry to the upside when price is reaching an area of sell sensitivity that's been respected for a long time. All right, down to the daily time frame. We identified a daily downtrend because we see what was former respected highs. Now, price made a push to the upside, exhaustion, bullish engulfing candle. This is where we entered our long on the previous trade, and we reached TP3 at our weekly mid-range zone. But as we know, price on each time frame has its own push and exhaustion cycle. So even though we have a push and exhaustion on the daily time frame, that does not mean we have a push and exhaustion on the weekly time frame. So what we are expecting, as mentioned before, is a higher time frame exhaustion, not a lower time frame exhaustion. So back to the daily, we see price reach its weekly mid-range zone. We see our first impulse move of sell sensitivity. First bearish engulfing candle close on the daily. That's an impulse move of sell sensitivity. That's take profits being hit. That's sell limits being entered. That is stop losses being hit. There's a lot of sensitivity at our weekly mid-range zone. But again, if you've been with me or you've taken FXGU, you know that for a higher time frame change in direction, we require something called a double confirmation. So what does that mean, double confirmation? As mentioned, we see our first impulse move to the downside, but this isn't a true indication of whether price is ready for a change in direction, because we know that this is just market sensitivity, like we mentioned, targets being hit, stop losses, sell limit orders. So what we're waiting for is a double confirmation. I would like to see buy sensitivity retest this weekly mid-range zone, where then we're waiting for the second wave of sell pressure to hit the market. That is a true indication of a change in direction. So now let's take it to the 4-hour chart for a closer look. All right, down to the 4-hour time frame, we identified our 4H mid-range zone. Why? Because we see horizontal buy sensitivity. This is telling me that there is buy pressure at our 4H mid-range zone. So when price makes its way down to its mid-range zone, we will see buy sensitivity. So that means we know that price is ready to come back for its higher time frame exhaustion to the downside when it breaks this 4H mid-range zone to the downside, because this is our last area of buy sensitivity. So we're still on the 4-hour time frame. It's time to talk about entry, but I want to make this clear. To be a professional trader, your responsibility for you, your money, your family, whoever you're making money for, is to make sure you enter the highest probability trade, okay? So yes, some traders will place an entry short at our weekly mid-range zone, and they may be right, because price will likely come back for a higher time frame exhaustion. But for me, for someone who does this for a living, I require high probability entries. This is our next area of sell sensitivity. I will stay patient. I will wait for price to break this 4H mid-range zone to the downside. That's considered a push because this is an area of sensitivity. What's after a push to the downside? An exhaustion to the upside, where then I'm waiting for price action confirmation before placing an entry to the downside. That would be a bearish engulfing candle close at completion of exhaustion. That's price action confirmation. All right, so what would make this trade invalid? Very simple. If price fails to break this 4H mid-range zone to the downside, it's because there's a lot of buy pressure, which means this trade becomes invalid because we won't have sellers be able to make our way down to TP3. All right, that's it for Aussie Kiwi. I hope you like this analysis. It really just comes down to the push and exhaustion cycle and making sense of how that looks on the lower time frames. Remember, for example, a bullish engulfing candle on the monthly time frame is a push on the weekly time frame, and the weekly time frame has its own push and exhaustion cycle, which differentiates from the daily push and exhaustion cycle. That's what we have to do. We have to make sense of the push exhaustion cycles using area sensitivity from all the time frames. That's it for Aussie Kiwi. Have a great day, team.